Welcome everyone to the Local Government Pension Scheme Pension Board. Today's Friday the 21st of March 2025 and we're starting at 10 o'clock. I just need to read some announcements before we get started. Attendance at this meeting. The Council will be holding this meeting electronically. Members of the public may also attend this meeting in an electronic capacity, and there will be a link on the Council's website for them to do so. Members of the board are asked to keep their microphones switched off until called to speak and switch their microphones on once they have finished speaking. Cameras may be left on throughout the meeting if members wish. If you experience connection or other technical issues, it may help to switch your camera off. Cameras should be switched on if and when speaking in the meeting. To indicate a wish to speak, members should use the raise hand function. Use of the meeting chat function is exclusively for voting. At the end of the debate on each item of business, there will be a vote. Voting members only, not subs, should vote using the meeting chat function by indicating for, against, or abstain. I will declare the result after each vote. Breaks of at least 15 minutes will be held every 2 hours and will be taken after the speaker in the debate has finished speaking. If we are voting, the vote will be concluded before the break is taken. Other breaks will be incorporated as appropriate. Thank you. So I've got some chairman's announcements. So I'd just like to remind everybody in this meeting that it's the beginning of PERDA today. So if we could refrain from making any political comments, this isn't a political panel, so we shouldn't have any problems with that, but just to remind people, thank you. There's one membership change, and that's Rob McCarthy is substituting for Sarah Ansell. And we have apologies from Gareth Wall and Martin Keenan. Thank you. So, declarations of interest. Are there any financial or pecuniary interests related to specific matters on the agenda? If anyone would like to declare those now, there will also be the opportunity to declare those at the beginning of any item that you feel it might be relevant to. So, but if you want to do that now, you can. Okay, I can't see anyone putting their hand up, but just remember you've got another option, another chance to, if you need to later. So the first item is the minutes, part 1 minutes, and I'd just like to ask the board to confirm the minutes of the meeting held on the 12th of December 2024 as a correct record. And if you could do that in the chat, please.
That's agreed, Chairman.
Thank you very much. So we're going to move to item 2 now. And item 2 is the Pension Fund Business Plan for 2025-26, and that's going to be presented by Patrick Towie.
Thank you, Chairman. This report is our annual business plan for the forthcoming financial year. It sets out the proposed business plan for both the committee and board. Attached as Appendix A to this report is the outline of some of the papers that we'll be bringing to the board and committee over the forthcoming 12 months. A lot of the work over the next financial year will be focused primarily on the triennial valuation, and there is a report later on the agenda that gives members of the board an interim position on the funding level, as well as we'll be doing some work on the investment strategy review, which takes place every 3 years. The big piece of work, which is a sort of unknown for officers at the moment, is the development of the access pool and the business plan, which myself and officers from the other 10 funds have been working on, and which was submitted to government at the end of February, is awaiting a ministerial decision. The officers are having a group of officers accompanied by the chair and the Section 151 officer will be meeting the ministers next week, and we'll get a sense of whether the minister supports the business plan, and if so, then we can progress and develop the investment management company that we were required to put in place by March 2026.
Alongside that, there will be review of strategies and policies. A lot of these will be underpinning some of the 3 tranches of work that I've referred to. So the valuation, there'll be a number of policy updates there. The investment strategy, there'll be a review of the RI policy. And in respect of the access pool, there'll be a lot of work in transitioning assets into sub-funds and moving over legacy assets into the pool by March 2026. There's also the pensions dashboard, which will be implemented later on in the year, and John Crowhurst will refer to that in his presentation earlier on. And we also have a new committee, which will be starting post May elections, so there'll be induction and training for those members, which will also extend to members of the board as well. We think it's important that board members, some of the board members have joined over the last 2 or 3 years, and it's a good opportunity to give them a refresh. So we'll be inviting board members to along to these sessions. Section 5 of the report gives details of the fund's contribution to the LPPA budget. There has been an increase this year, and so the budget contribution, which was approved by committee, is 4.6 million for the forthcoming financial year. A lot of the cost drivers in that increase are being driven by regulatory requirements. We're having to meet the requirements of pensions dashboard. We're having to deal with the McLeod, and in the fire scheme there's some other regulatory issues that we have to deal with in that particular scheme. So it's meant that we've had to bring in some additional resource, or the LPPA have had to bring in additional resources. Alongside that, the LPPA are doing a data improvement project, which coincides with valuation this year. So that particular part of the fund, the administration side, is getting increasing volumes of work, which is reflected in that increase. I wasn't going to say much more, Chairman, on that particular report. Happy to take questions from members of the board.
Thank you, Patrick, for that. Are there any questions on the business plan for Patrick, or any comments? I can't see that there are any comments or questions. We can double check. No. Okay, so in that case, I'm going to move to the recommendation. And the recommendation is that the board notes the contents of this report and comments on whether they wish to see any further items on the forward agenda. So if you could please put your vote in the chat.
That's agreed, Chairman.
Thank you very much. Thank you, Patrick. If we can move now to item 3, which is the Pension Fund's Treasury Management Strategy 2025 to 26. And I think that's going to be presented by Rob Winston.
Yeah, thank you, Chair. So this is the annual report that goes to Pensions Committee for them to agree the officers' proposals for the new financial year's Treasury Management Strategy for the investment of pension fund cash. Pension fund cash currently has a strategic asset allocation of 1%, and this cash is used for the day-to-day liquidity of the fund, including such things as the monthly pensions payroll. 1% of the 23-24 audited accounts asset value equates to 62.5 million. However, officers proposed to committee that the cap remained unchanged at 59 million as per the 24-25 Treasury Management Strategy, as this value is more than adequate for the needs of the funds and equates to around 0.94% of the fund's assets. This was agreed by committee at its meeting on the 3rd of March. There's been no other changes to the Treasury Management Strategy since last year, and happy to take any questions.
Thank you, Rob. So we're essentially reducing from 1% to 0.94%, I think you said. Thank you very much. Yeah. Are there any questions or comments for Rob on this item? Okay, I can't see any questions or comments, so I'm going to go to the recommendation. And that's for the Pension Board to note and comment on the 2025-26 TMS for investing pension fund cash, which is set out in Appendix A. So if you could please put your vote in the chat. Oh.
That's agreed, Chairman.
Thank you very much. Thank you, Rob. So we're going to move to item 4 now, which is fund policies review, and I think that's going to be presented by Alison Sharp.
Yes, thank you, Chair. This report is to provide pension board members with an update on the review of 4 key policies where committee are required to approve any changes. The LGPS regulations referred to in Appendix A set out where an administering authority should prepare and publish a policy or strategy. The discretion policy and communication policy has been reviewed, and they do not have any material changes since being approved previously by committee. The government's compliance statement is taken to Pension Committee each year for approval and sets out the fund's governance arrangements for the pension fund, which is being updated ahead of this year's audit. The draft policy is in Appendix B. There are no significant changes from last year's statement. And lastly, the fund pension administration strategy sets out quality and performance expectations for the funds, its administrators and the scheme employers. The strategy has been reviewed and updated to reflect changes to the frequency and way employers submit data to the LPPA following the move to monthly return submissions. Employer responsibilities have been strengthened with regards to outsourcing and data protection. And lastly, a line has been added to reflect the commitment to continuous improvements to processes and service level agreements. The committee approved the draft pension admin strategy at the last committee meeting. The strategy is now out with employers for consultation for a 6-week period, which closes on the 16th of April. If there are any material amendments required following the employer feedback, the draft strategy will be taken back to committee to approve. And that's what I was going to say on this vote.
Thank you very much, Alison. Are there any questions or comments for Alison on the fund policies review? No, doesn't look like there's any questions, no hands raised. Okay, so we'll move to the recommendation then. And the recommendation is that the Pension Board notes and comments on the revised governance compliance statement and pensions administration strategy. And if you could put your vote in the chat, please.
That's agreed, Chairman.
Thank you very much. So we're going to move to item 5, which is the employer risk and governance, and that's Alison again.
Risk and governance, thank you. Yeah, sorry. So the main highlight in this report is the number of risks in the red category decreased by 37 in the quarter. This decrease is largely due to the recommendation that we took to last committee to recategorise outstanding admissions to amber risks. The committee agreed to the recommendation that outstanding admissions will now be rated as amber risks, where they will continue to be monitored closely and updated on all admissions, and updates on all admissions will continue to be provided within this report. Where there is a concern with a particular admission, it will then be escalated to a red risk, and a recommendation to invoke the admissions delay policy will be taken to committee. The number of outstanding admission agreements are highlighted in Table 5. There are 27 admissions in progress during the quarter. All employers with outstanding admissions are engaging with the fund's legal team, therefore officers do not foresee any issues. 10 admissions were completed during the quarter. With the recategorisation of outstanding admissions to amber risks, there are 10 red risks remaining. These risks are outlined in Table 3 of the report. Thanks, and that's all I was going to say, but happy to take any questions.
Thank you, Alison. Are there any questions for Alison on this item at all? Oh, yes. Gail, please.
Thank you, Chair. Thank you, Alison. Not really questions, more a comment, because this report is something I'm always banging on about. I think that the recategorisation to amber the bulk of those items is sensible, because it means we can see the wood for the trees. And it's just to express the usual hope that we keep chipping away at the remaining ones, because when you compare the reports quarter on quarter, you often see the same cases coming up time and time again. I mean, I realise that they're few, and probably, although they're red risk rated, in the great scheme of things, they're not a huge risk. It's just that I just hope that we do keep on top of them. That's all I wanted to say. It's just a comment, really. Thank you.
That's fine. Thanks, Gail, for your comment. We do keep continuing to chip away at them, so please don't have any concerns there.
Thank you.
Thank you, Gail. Are there any further questions or comments for Alison? Can't see any, so we'll move to the recommendation again. The recommendations are that the Pension Board notes and comments on the change of risk category for admission agreements to amber risks unless there is a reason for concern. The Pension Board notes the content of the report. So if you could put your vote in the chat, please.
That's noted, Chairman.
Thank you very much. So we move to item 6. Item 6 is the Hertfordshire LGPS Q3 LPPA performance report, and that's going to be presented by John Crowhurst. Thanks, John.
Thank you, Chairman. Morning, everyone. So I'm going to walk through the Q3 performance report, and as always, I'll give an update to the board on performance since December. And I'll also give an update on some of our key strategic projects that we've got ongoing currently. So performance during the period was again positive. Overall 98% SLA, 97% retirements and 96% bereavements. And then since December, again, performance has been strong on the SLAs, which is now at 99% for Q4 to date, and 97% retirements and 97% bereavements. Help desk wait times remain below the aspirational target of 4 minutes. And I draw your attention to pages 114 to 116 in the report pack, which gives an overview of the number of retirees that are receiving a first pension payment within 30 days of their retirement date. And as you can see, and as we've discussed at previous meetings, there is a direct correlation between how much notice is provided to LPPA by employers to facilitate payment happening. So essentially, when we're notified on time and the member hasn't got an AVC, typically around 70% of people are receiving a payment within 30 days. And we continue to work with your employers, and your pensions administration strategy will help improve, I think, the information flow between us and your employers. Retirement satisfaction overall, if we looked over the last 12 months rolling across all of our LGPS funds that we work with, we've seen an increase in satisfaction of around 27%, which is great, which gives us an indication that all of the activity that we've been undertaking to think about the member journey and the member experience is starting to see benefits. There'll be key things in there that have probably had that impact. So one is a continuous improvement with the information flow between employers, and secondly, we've changed a lot of our processes to make sure that if there are delays, members are more well informed as to what's happening with their retirement process, and I think that's driving the satisfaction to improve. Looking at complaints, the number of complaints received now is significantly less. So between July and October last year, we were receiving on average around 18 per month. That has now consistently been around 9 per month for the last 4 months. So we've seen a significant reduction in the number of complaints received. If I move on to some of the strategic projects, and I'll start with the data project that Patrick referred to. So there's lots of work happening at the moment between the fund, LPPA, and your fund actuary to make sure that the data is is as clean as it possibly can be before we submit that later this year. The fund commissioned a specific data cleanse exercise to process some historic pending leavers, and that's had some great success. We've seen lots and lots of retirement leaver notifications come through from your employers, and we've now been able to process those records to the correct status. On the monthly returns, so we have now received 91% of the data that we would expect from employers up until the end of February, which is great, because the earlier that we receive the data for this current financial year from your employers, the more time we've got to then cleanse it before we submit the information to your actuary. So I think that's actually quite a good and positive news stories with regards to where we are with the monthly return submissions now. The next project that I wanted to provide an update on is the remedy and the McLeod remedy. So currently, what we've been doing is reporting updates on projects as part of the executive summary and the performance report. I think following feedback from this board at the last meeting and from the pensions committee, we're going to change the way that we report updates on key projects for the next committee cycle. What we're going to do is we'll provide specific project status reports so that you get more information around where we are actually against the key milestones within the project. But from the McLeod remedy perspective, an update, I think in the update in the report, it said that we were still working with Civica to agree dates for when we were going to get the functionality to enable us to do the next stage of the project. I'm pleased to say that we've agreed those dates now. So there's effectively two releases that we need to deploy into our system. The first was delivered in March. That's been tested and deployed, and the next release is in May. So once that's in the system, has been tested, we will then be able to move on to the next phase of the project, which will be to identify how many members that have already left the scheme that require a remedy calculation. Now, we're not expecting there to be huge volumes when we do get to that position, and all of this needs to be done by the end of August this year. And we're expecting the functionality that we receive to enable us to do a lot of this in bulk. So even though we haven't got the specific numbers yet or a specific plan to provide to the pension board and the committee, we're still quite confident that we'll be able to deliver against that deadline. The next project is the pension dashboard, which again is tracking as a green status on our side. So we've, as you know, we've appointed Civica as our integrated service provider, and we need to connect to the dashboard ecosystem in October this year. That's all on track. The big piece of work that's happening in the background is actually linked to the data project, and that's about making sure that we hold the correct data on behalf of your members. So we've been engaging with a third party to see what's missing. So essentially that's to make sure that we hold the correct surname, forenames, date of birth and address for members. So we'll be speaking to officers during the next period to talk about what we need to do next in order to make sure that the integrity of the data is correct before the dashboard eventually goes live. And then the last thing I mentioned, Chair, and then I'm happy to take questions, is our efficiency and service improvement programme, which has been ongoing now for about 18 months and has delivered some really good self-service and automation functionality for members. So where we are now, and I'll just look at the retirement process. There are now certain processes that can be fully automated at the beginning. So there are instances now where one of your fund members may contact our contact centre, ask for a retirement quote. That quote can be triggered straight away by the contact centre advisor, and within minutes, as long as it passes certain validation checks, that quote will be available for the member to review on Pension Point. So that's been live for some time and has significantly reduced the elapsed time between us being asked for a quote and us producing the quote, which is great. And the second part of that process that has only been live for a couple of weeks for your fund members is the ability for members to complete the retirement form online in Pension Point. So now if a member chooses to go down that route, they can log into Pension Point and select their retirement options in the portal, which obviously means that they're guided through the process, they're guided through completing the form to make sure that everything's correct before it's received by us. And we've seen instances now where that is starting to significantly reduce the elapsed time of that retirement journey. So as more people start to use it and we have more data to be able to share what impact it's actually having, we're planning to include some of that information in the performance reports moving forward, so both the board and the committee can see what an improvement that's having on the member journey. So we're hoping that all of this activity will continue to improve the member experience, and hopefully we'll start to see that continue coming through in the retirement satisfaction surveys that we send. So I'll pause there, Chair, and I'm happy to take any questions from the board.
Thank you, John. Are there any questions on either the performance report or any of the ongoing projects that are taking place? So I've got some hands up. So Sharon, please.
Thank you, Chair. I'm a member rep as a deferred member and former employee of University of Hertfordshire. Thanks for the update, John. It's good to hear the continued positive performance. We've previously raised concerns over the data quality scores, and in particularly the deferred addresses, and also the number of deferreds that are over retirement age, so therefore clearly haven't claimed their pension. I wondered if you could give us an update on member tracing and the data quality project with regards to older deferred records.
Yep, thank you, Sharon. So, so the next phase of the data project is for us to share the interim results back to the fund around how many members what we would describe as living as stated or have potentially moved, and then it'll be the fund's decision as to how they wish to take that forward. So I'd expect that in the next 4 to 6 weeks, we'll be able to provide that information across to Patrick and his team. And then what will essentially happen is the third party that we use to do the tracing exercise will undertake more detailed analysis, provide the addresses back to us. We will update the system, and for those members that have already passed retirement age that have moved that we haven't been able to contact previously, we'll obviously over time start to contact those individuals and see if they wish to claim their pension benefits.
Thank you, that's helpful, and it'd be helpful to hear an update at a future meeting. Thank you.
Thank you. James Hurley, please.
Yes, good morning. James Hurley, member rep. And my question is on fund membership on page 9 of the report. And I did send an email yesterday. Hopefully John's had an opportunity to look at it. Yeah, my question is, I can see that total fund membership has increased between the 4 quarters, 135,351 to 137,789. So it's increased by about 2,400. But within that period, the active membership has actually fallen quite significantly by about 2,400, which looks really surprising. If the total scheme membership is increasing, one would expect the main cause for the increase in membership to be more actives. So John, can you just give us some sort of context on that, and can we be confident that our starting figures are correct there?
Yeah, no, thank you, James. So first of all, the membership overall has increased because your employers have effectively caught up with their monthly return submissions. So a lot of the monthly return submissions do 2 things. 1, they notify us of new joiners to the pension scheme, and 2, they notify us of anyone who's left. So the new joiners have all been notified to us as part of the monthly return, which has increased your overall membership. And with regards to the shift between the actives, so the fund commissioned a pending leaver project. So this is where we had lots of records where we believe the member had left the scheme, but we hadn't received the leaver notification from the employer. And we've been processing those records to deferred or refund status. So that big project has closed. I don't know the number off the top of my head, Alison probably does, but I know it's over 1,000 records have changed status as a result of that. So that'll be why the active membership has changed.
So would that not, I'm not suggesting we go through the formality of this, but effectively, do we need to restate our Q4 23-24 figure to get a better understanding of the underlying increase in active members?
Well, in our performance report, the one that you're referring to in the pack, that the numbers that are included in each status are as they're held at the point in time on our pension system. So, and we've done that for, well, since we've been producing these performance reports. Now, the fund actuary may take a different view and may record the statuses based on the event date. So they might class a deferred member as someone who, say someone was deferred a year ago, then they might restate to say that deferred member was deferred a year ago and not now. But I don't think we need to restate it for the purpose of the performance report, James.
Okay, but I trying to gauge our ability to meaningfully interpret the figures. How meaningfully can we interpret that 44,812 figure in the context of a fairly significantly lower active figure 3 quarters later? I think what you're saying is that there's a number of issues there within that 44,000 figure, which means that we can't simply, we have a limited ability to then understand the trend in active membership data, and that's an important issue for us.
Yeah, I mean, what's not included in the report, maybe I share something with officers to take a view on what's passed across, but we do have what we call a movement analysis report, so we can track the status of each member during different periods. So whether or not that would be helpful to reassure you around the movements in numbers, I'm not sure, but I'm happy to take that away and provide something to officers to pass on, James.
Okay, yeah, thank you. Thanks.
Thank you very much. Are there any further questions, comments? Okay, I don't think there are. So if we can move to the recommendation. Okay, the recommendation is that the pension board notes and comments on the contents of these appendices. And if you could just put your vote in the chat, please.
That's noted, Chairman.
Thank you very much. So we move to item 7, which is the General Code of Practice Compliance, and that's presented by Alison and Barry McKay. Alison, are you going to introduce?
The General Code of Compliance report. That's just me on this one. Sorry.
Oh, okay. Yeah. My mistake.
That's okay. Thank you, Chair. So, as you will be aware, the General Code of Practice came into force on the 28th of March 2024. So this report provides an overview of the fund's compliance with the code and has been undertaken with assistance of our actuary, Barnett Waddingham. The fund is rated compliant or compliant plus against 71% of the modules. 10% of the modules are awaiting assessment and require some work to become fully compliant. These modules are detailed in section 3 of the report. The remaining 19 of the modules do not apply to the LGPS, and so work will be continuing towards becoming fully compliant, and we'll bring a further update later on in the year on this. I'm happy to take any questions.
Thank you very much. Are there any questions for Alison or any comments? James, please.
Yes, good morning. On the section 3.13, maintenance of IT systems and the classification of required, just welcome any sort of context on what would be required to take back to good practice.
3.1, sorry, in the report.
So on section 3.13, there's, hopefully I understand this correctly, there's a subheading administration maintenance of IT systems.
Sorry, apologies. Let me just pull the report up. So we have a lot of specifics in place for cybersecurity and IT. We've done a lot of work around that to make sure we've got things in place. It may well be that we are compliant, but we just need to do further assessment to make sure that everything is in place. But with maintenance of IT systems, I think we would just need to obviously just make sure everything's in place with our IT system within HCC, but we'll be obviously undertaking more work on this as well.
I think Patrick wants to make a comment.
Yeah, thank you, Chairman. The fund is dependent on the County Council's IT infrastructure, so fund officers will talk to our IT team to make sure that they've got all the appropriate firewalls in place. Third-party providers, we also ask them about their cyber risk qualifications, and John and his team will provide that detail to us. All the other third parties we interact with, such as custodians, we have conversations with them about how frequently they test their systems. So it's all about system upgrades, if they got cyber risk policies in the background, and compliance. We recently did a BCP, a business continuity test, to test whether the fund could continue to operate if our main systems went down. And because we're dependent on a lot of third parties, we can work off site, and we talk to our third party providers also about what their backup plans are as well. So a lot of them will have other sites that they can get up and running to support us. So it is about making sure that the IT infrastructure that the fund uses is risk assessed. There is cyber risk policies in the background, and it's being upgraded. There's appropriate firewalls in place, and in the event that Hertfordshire systems go down, which we are dependent upon for sort of accounting and intranet, that sort of stuff, that we can still be operational and pay third-party suppliers. Hopefully that helps, James.
Yeah, no, that does help. Thank you, Patrick and Alison. I was just trying to get a sense, is it more of business as usual? We'll periodically test, review, develop, or is it more, no, we think we want to have a bespoke plan to take it up to that level?
Thanks, James. We have plans to meet with BW in the coming months to look at putting together a cyber policy for the fund, but we do have we have gone through all the cyber and IT systems and security, so we have a lot of things in place. So it's a good chance we could be meeting the expectations of the code, but we just need to do a further analysis and assessment just to make sure that everything is in place, and if we've got any gaps, and then we'll be able to share that with BW as well, and then hopefully we will be fully compliant. We just need to do some further assessments on this. Hope that helps.
Yes, thank you. Thanks.
Thank you. I don't think there's any further questions, so we'll move to the recommendation. And the recommendation is that the pension board notes the contents of the report. And if you could just make that known in the chat, please.
That's noted, Chairman.
Thank you very much. So item 8 is the Pension Fund Risk Register report, and that's Alison again.
Thank you, Chair. So there's just a few things to mention on this report, and it's just that a new risk has been added under F9, which is a local government pension scheme Fit for Future, which has been added under large projects to monitor the Fit for Future proposals and how they affect the fund and also the access pool. And also we've closed 2 risks, the first of which is risk F4, which is new custodian. As the custodian has now been in place for a period of time, this risk has been closed, and the custodian will continue to be monitored under risk D1. And we've also closed risk F8, new actuary. This has been closed as a transition to Barnet Waddingham we consider to be successful and is now being treated as business as usual. So that's all I was going to say on the report, and happy to take any questions.
Thank you, Alison. Are there any questions or comments for Alison on this item? I can't see any hands up. So the recommendation for this item is that for the pension board to note and comment on the contents of this report and the risk register at Appendix A. So if you could put your vote in the chat, please.
That's noted, Chairman.
Thank you very much. And item 9 is the Pension Fund Investment Performance Report as at the 31st of December 2024. And this is Jonathan Crover to present this. And this is the part 1 part of this report. So there may be some questions you have that are in part 2. So just think about when you ask your question. So Jonathan, please.
Thank you very much, Chair. So just looking at the executive dashboard on page 2, starting in the top left-hand corner with asset allocation. We're going to talk a little bit in part 2 about asset allocation, but essentially the growth assets continue to be running overweight position due to strong growth in equity markets over the last couple of years. And bond markets also, fund is overweight, and that's due to some of the allocation that's been made to assets in connection with the equity protection strategy. The fund continues to remain underweight to diversifiers, and again in part 2 of the meeting we're going to talk a little bit about how we're going to rebalance the mandate back to its target asset allocation. The challenge with the diversifiers is that they're very illiquid assets. So one of the things that we've been discussing is how we can maybe put in place some assets that will have the same characteristics as those illiquid diversifiers, but has a little bit more liquidity, more of a warehouse type arrangement. Just at the bottom there on asset managers, you'll see that assets were now transferred from the UBS Overseas Equity Passive Mandate to the Osmosis Responsible Investment Mandate, and that's now completed and successfully up and running. Moving across onto the right-hand side, in terms of performance, the fund outperformed the benchmark during the quarter, although remains behind benchmark of 1 and 3 years, but ahead of benchmark over the longer term periods. What we saw during the quarter was a strong growth for equities on the back of the US presidential elections and a slight weakening in bonds. We also saw the dollar strengthen, which had some impacts on the currency hedging overlay strategy that's been put in place. Just on the bottom right hand side, additional comments is that following the manager changes, been disinvestment of the CBRE property and consideration of strategies around real assets with LGPS social housing and also US TIPS, which is Treasury inflation protected securities, which is connected to the warehouse facility that I was talking about earlier on. Just moving down on to slide 3, just giving a quick overview of what happened in markets, and markets have been quite volatile. So this, remember, reflects the position as at 31st of December. We saw a strong quarter for equities, as I said, driven by growth in US markets, and global equities were strong. A bit of a reversal in bonds, especially gilts, where there were lots of concerns following the announcements in the budget in November, just around the position of how much money was going to be required for borrowing for the UK, and that pushed up gilt yields and around some nervousness about upcoming inflation and how that might be higher than previously expected. If we move ahead on to slide 6, things have been changing quite a bit in the first quarter, as I'm sure you'll have seen. There's been a lot of talk around tariffs, and that has had a fairly deflating effect on US growth outlook. And so that's brought US equity markets back quite a bit during the first quarter. So we've seen some underperformance from US equities. Also on the technology sector, which has been leading the market very strongly and rallied quite strongly on the back of the presidential election. The AI facility or capability announced by the Chinese, which was developed at much lower cost than the likes of ChatGPT, has sort of had some dampening on the enthusiasm for US technology. So that's pulled back also in the first quarter of 2025. Valuations were stretched going into the end of the year, and markets were very concentrated. So again, that's led to a position of pulling back and nervousness, particularly with concerns now starting to raise about US interest rates being on hold, not coming down because of the inflations that might come through the tariffs and global trade battles. And also the slowing off of the technology sector has helped to bring the market back. So we've seen stretched valuations, which has also been a concern. In terms of ex-US, so outside the US, actually the position has been changing. Europe's been looking much more attractive following the decision, following the feedback from the public policy debates around support for Ukraine and the move by Europe to actually have a much stronger spending on its defence. And so this whatever it takes strategy has meant that the German government have brought through plans to ease off the debt brake that they had in place and allow them to spend a lot more. And that we see has been a real positive for European equities. In terms of German and European bonds, it's been a negative, and this has also helped push up the yield on gilts in recent weeks, in that there's going to be a lot more borrowing in Europe, and markets want to be rewarded for that additional borrowing. So that's what we've seen. In terms of where we go next, I think it's quite difficult to predict. It almost changes daily. But I think the biggest concern and the biggest risk is on downside to equities, and it's all really around trade war and the issues around tariffs, what that will do to inflation and what that will do to the US dollar. Just moving on into the next section, I think I just want to talk a little bit about the asset allocation. Again, I mentioned earlier the fund has been performing strongly in equities. So we've seen good returns in growth assets, and that's pushed to the overweight position there relative to the benchmark. But as I mentioned earlier, we have a paper in part 2, which will cover the proposed changes to the actual allocations to bring it back in line with the benchmark. Very briefly, again, just on investment performance, you'll see there that for the quarter it was strong, reflecting the strong growth in US equities, outperforming the benchmark. On the manager's side, moving forward on to slide 11, you'll see there onto slide 12, you'll see some quite strong performance from Baillie Gifford, which benefited very strongly with tech outperformance in the last quarter of 2024. A chunk of that will definitely have been rolled back in early 2025 as the tech sector has struggled more and growth assets have been less in favour. On the opposite side, Dodge & Cox are a value manager, which tends to perform in an opposite way to growth stocks, hence the reason for having them both in the portfolio. Had a difficult quarter 3 when value stocks were out of favour, but it's probably going to have a better quarter 1 in 2025. So I think that pretty much brings me to a close on the manager summary as well, but happy to take any questions.
Thank you, Jonathan. Are there any part 1 questions for this report? I can't see any hands up. Okay, so we move to the recommendation, and that is for the pension board to note the investment performance report. And if you could put your comment in the chat, please.
That's noted, Chairman.
Thank you very much. The next item, item 10, is dates of future meetings. They're listed there for everyone to see. I think they're all listed as virtual at the moment, and it might be that we have an in-person meeting, but I think that's something we'll discuss in future, and obviously we'll let everyone know what's decided then. So I don't think we really need a vote for that item. It's just a sort of information, really, for people to put in their diaries. So then we move to the final item, which is 11, which is any other part 1 business, and there is none. So I'm just going to wait for the nod now as we move into part 2. I just want to make sure that's confirmed, and then we'll go ahead with the next part.